Hello, I'm Stephen Ho, trader and founder of The Stop Hunter. Now, I get asked a lot of questions, the who, what, why, how, where, when, all about trading and financial markets from new traders, and hopefully in this YouTube channel I'm going to put together and answer a lot of those questions. And if you have any questions, please put them in the comments below and I can see what I can do. But in this video we're going to talk about the currency pair. What is it? How does it work? All those facts you need to know as a new trader to get you off and running. Now, don't confuse our pair with the fruit. Sorry, bad joke. But like in a video clip there, actually the currency pair is made up of two parts that become one. All a currency pair is two currencies that are measuring the value of one against the other, and all currencies trade in pairs, and the value of a currency is always determined in relation to its value against another currency. The first currency in the pair is referred to as the base currency, and the second currency in the pair is referred to as the counter, or sometimes a terms currency, and therefore the quote is for how much of the counter currency it takes to buy one of the base currency in the pair. Let's have a look at a couple of examples of that in action. You can see just to the right of the screen that the GBP USD, that's the Great British Pound against the US dollar, is currently quoted as 1.30102, or ticking over 3-5 round about there. But what does that mean? Well, quite simply it means that £1 equals $1.30 in the US currency. It's as simple as that. And towards the top of the screen we got TRY/JPY, and that is the Turkish lira against the Japanese yen, and that's currently at 21.105. What does that mean? Well, that means one Turkish lira equals 21.105 yen. So what are the largest traded pairs currently? So in fifth place we have the Canadian dollar against the US dollar at 5.22% of all FX market trading. Then we have the Australian dollar against the US dollar at 6.37%. In third place, the GBP against the USD 11.27%. Then the US dollar against the Japanese yen 13.34%, and in first place by a long way the euro against the US dollar at 27.95%. So you can see those top five currency pairs actually make up nearly 2/3 of the daily $5 trillion traded FX market. So it's quite substantial, just those five pairs. Now these currencies can be broken down into separate categories, and there's three major categories that they will be put into. The first group is called the major FX pairs, and that's got 7 pairs in there. That's the euro against the US dollar, the pound against the US dollar against the yen, the US dollar against the Swiss franc, the Australian dollar against the US dollar, the New Zealand dollar against the US dollar, and the US dollar against the Canadian dollar. The second popular category is known as the major commodity currencies category, and inside that it's got the Australian dollar against the US dollar against the Canadian dollar, the New Zealand dollar against the US dollar, and the South African rand against the US dollar. There are other currency combinations, as we'll see in a minute, that could be classified as commodities, such as the Canadian dollar against the Japanese yen, but they fall into our third bucket, which are called cross currencies, and that involves all those different countries' currencies together. It could be, for example, the pound against the Russian ruble, the euro against the South African rand. Whatever combination you put together, that's called a cross currency. The most common cross currencies involve the euro, the pound and the yen. Now you might be asking yourself, why are these currencies the certain way around? Why is the pound before the US dollar? Why is the euro before the pound, etc, etc? Now there are some confusing rules to watch out for here, and this can catch you out if you're not careful, but there's an established priority ranking of the major currencies, all to do with politics over time and etc, etc. But in first place should always be the euro. The euro should always fall before any other currency, and it's the same with the pound, the Australian dollar and the New Zealand dollar. Maybe for old colonial reasons, when the pound was super strong against the other currencies, maybe that's why they came first. But then we got the US dollar that you will see sitting before most other currencies, and then following the Canadian dollar, the Swiss franc and the Japanese yen. And like I say, it's all to do with politics, but that is the general order of play. So if we're looking at the euro against the pound, it should be always that way round: euro first, then the pound. But do remember, because the US dollar is the #1 currency at the moment, that most currencies are quoted first against the US dollar. The exceptions, like we said, pound, Australian dollar, euro, New Zealand dollar. Now there are some other further key rules that you're going to need to know about, and this often confuses people as well. It's, how do you know something is strengthening or weakening? You might hear it on the news or read it in the paper that the pound has strengthened. What does that exactly mean? Well, if we look at this very basic chart, we can see that the exchange rate is rising, and in this example that means the base currency is strengthening and the terms currency is weakening, i.e. when the chart is going up, the base currency is going up. And you also might see that there's a lot of decimal places involved in the forex market. Now the majority of currencies are to 4 decimal places, but there are some exceptions. If anything involves the Japanese yen, it's to 2 decimal places, and there are some further exceptions where you'll see to 5 decimal places. That's, for example, the Norwegian kroner, the Swedish kroner and the Hong Kong dollar. So finally, what else do you need to know? Well, it is the term called pip. Now this is a term used to measure or give you a number around a tiny move in a currency pair, and it's a standardized unit of measure. So for all US pairs it's 0.0001, so that's 4 decimal places. For Japanese pairs it's 2 decimal places, i.e. 0.01. so that last number is and if it was, say, for example, a 1, that's a 1 pip move. So you'll hear a lot of that in FX trading, and very important to understand that, especially in the other videos we're going to do about how you calculate pip sizes and trade sizes using things like MT4 and working out where to put your stops, etc. Well, that's it for this video. I hope you've enjoyed it. Like I said right at the start, if you've got any content or questions you'd like me to answer and turn into a video, then please put that in the comments below. And all that is left is, if you've liked the video, hit the button, hit the subscribe and bell button to receive any new content notifications, and anything else you'd like to know about me or the Stock Punter is all in the description below. So I hope to see you in the next video. Good luck with your trading, and hope to see you soon.